all right. Good afternoon. This is Neil with Simpler Futures, Simpler Trading, and it is Thursday, the 21st of December. So tomorrow you'll wrap it up because markets closed on Monday, Christmas Day next week, and we'll be back at it, Tuesday of next week. So this will be my last video for the week. So kind of wish everybody a good, happy holidays, Merry Christmas, and good weekend too, because it won't be back on videos until next week. So S&P's here, nice recovery from yesterday's selling, just about out of the woods. I don't know that it's quite out of the woods yet, but we like to say that the last line in the sand is a 618 retrace before it's no longer a retracement, but a full on recovery. Once it clears this 618 retrace, which is today's high, you'd immediately be looking to the 887 up here at 48.20. I don't even know why I got 76.4 on there. It doesn't matter. It'd be 48.20. So let's see. Now, if remember, this is the last line in the sand, the last line of defense for anybody that is wanting to see this thing roll over for a lower low than yesterday's low. And that's fine if it does do that. This, to be careful right here at the 97 level, 47.97. You want to see it clear that. If it clears it, it's going 48.20. That'll be the next spot that it would, be looking for. If it happens to roll here and somehow, and that's not what I'm looking for, but I'm saying, what if, right? What if, right, it happened to? Then, okay, we look for a slightly lower low than yesterday's low. It'd be, what's the number here? 36. 47, like 36 or something right there. But that is just a handful of like 5-6 points lower than yesterday's low. So it's not like a big deal. In fact, what I would honestly really anticipate would be you're going to get a little reflection here that'll bring it back to no lower than 77. 77 was today's ending mid and VWAP, full session ending mid VWAP. It's also the 382 of the retrace in this whole sequence as well. So, like a little dip here off of the 618, but then comes back up and retakes it, push it, and then it's over. It's done. It's not a retracement, then it's a recovery, and it's like, back up here to the high. Now, one other thing that I saw kind of interesting today was here. This looks like a nice looking little setup here in Nat Gas. You could do this in UNG tomorrow. This is an equal and opposite ending on a bullish note. Down one day and up the next, perfectly reverses that bearish symmetry, from yesterday. So what it takes now is a breach of the high. A trigger is a breach of the high, of the range high of that formation, and the low of the formation is the risk, and up she goes. That's a nice looking setup. So there's a equal and opposite ending bullish for trigger with breach of high tomorrow, Nat Gas. You can switch over and do the trade in UNG or even options in UNG or Boyle, which is a leveraged ETF, and you can do options there. But that's leveraged, so if you do Boyle, you're taking on more risk because you got a little leverage involved there. But UNG is fine. Buy the UNG, buy calls, whatever. Just let it trigger. This is a setup. Requires a trigger, then it becomes a trade. So we got something there too. That'd be kind of cool. And that's about it really. I don't see a lot on here today. Gold looks good. Gold seasonally is bullish now, through the end of the year, and probably at least half of January. Seasonally, gold is bullish now for good 3+ weeks. And that's about it. That's what I got. So hopefully there's something in there for you and you get a good trade out of that. And like I said, for those videos, I'll see you again next week. But my thought on the equity front is the same as it has been. I haven't changed. Still holding with the same idea, and that is bullish through the end of the year and through the first part of January, at least the first week of January. But honestly, I'm thinking maybe even to mid-January. But and then we'll see if maybe they're ready to take the gloves off and get to getting a little different look about things. But for now, we'll try to hang with the bullish look. Okay, that's it. See you again next week. Take care.